So you've probably never heard of Hyundai Mobis, have you? But here's the thing. If you drive a car, you almost certainly use their stuff every single day. They're one of the biggest auto parts suppliers in the world, kind of the silent giant working behind the scenes. And in 2025, well, they made some serious waves with some absolutely record-breaking numbers. And yeah, that's the number right there, just under $43 billion in revenue. That's up almost 7% from the year before, which is a massive win, especially when you think about all the economic weirdness and the fact that the global EV market is slowing down. On the surface, it looks like this company is just absolutely crushing it. But whenever you see a number that big, you've got to ask, what's the real story? Is all this growth built on a solid foundation, or is there a little catch hiding just under the surface? Well, that's exactly what we're about to dig into. Okay, that leads us right into our first section, and I'm calling this one the profit paradox. Because this is where we uncover the kind of strange but totally fascinating business model that's powering Hyundai Mobis.
So where does that $43 billion actually come from? Well, at first, it seems pretty simple. You see that huge slice? Over 78% comes from their modules and parts division, the core guts that go into new cars. The other chunk, about 22%, is from their aftermarket business, think replacement parts and service. But that's where things start to get really interesting.
And here's where the story gets a little wild. Get this. That massive division bringing in almost 80% of all the money, it contributes basically nothing to the company's operating profit. It's pretty much just breaking even. Meanwhile, the entire profit engine of the company, we're talking nearly 100% of it, is being driven by that much, much smaller aftermarket division. So, the best way to think about this is a classic printer and ink model. They sell the printers, those are the big, expensive car modules, at super low margins, just to get them into millions and millions of cars. But the real money, that comes from selling the ink, the high-margin replacement and service parts that you and I need to keep our cars running for years. It's a brilliant strategy, but man, is it a delicate balancing act.
Okay, so when your whole business model is this delicate, it forces you to be incredibly strategic. And that pressure led Hyundai Mobis to make its biggest move yet, something we're calling Mobis's American Gambit. The problem they faced was pretty straightforward. The U.S. passed the Inflation Reduction Act, or IRA, which basically created massive incentives for electric vehicles and all their components to be made right here in North America. For a global company like Mobis, this was a huge risk. They could get locked out of one of their most important markets. So what was the solution? They had to go all in on America.
And when I say all in, I really mean it. This number, $883 million, is what they plan to spend on overseas facilities in 2026. And guess where most of that cash is going? Yup, straight into building and expanding their EV component plants right in the heart of North America, tackling those IRA rules head-on.
But look, this huge investment isn't just about putting out a fire or solving a short-term problem. No. This is about laying the foundation for the company's entire future. It's a critical piece of their blueprint for a whole new era of mobility.
And this right here perfectly captures that shift. This quote from the CEO says it all. They're not just thinking of themselves as a parts manufacturer anymore. They're completely redefining their mission to become a true mobility solutions provider. But, what does that actually mean in practice?
Well, it means they're moving along this path. They started out as a traditional supplier, then they evolved into a really sophisticated technology integrator, and now they're aiming for this final step, becoming a company that provides complete, holistic solutions for how we're all going to get around in the future.
And these are the new frontiers they're pushing into. We're talking about software-defined vehicles, where your car's features are all controlled by software that can be updated, not just physical hardware. They're even developing their own semiconductors so they don't have to rely on anyone else. And they're expanding into robotics. This isn't just a pivot, it's a complete reinvention of the company.
So, with this massive transformation going on, what's the immediate future look like? For investors, the real question is whether this incredibly ambitious vision is actually going to translate into real value. And the company's trying hard to prove it can, pointing to things like a total shareholder return of nearly 33% and aggressive stock buybacks. They're basically saying, hey, we're serious about rewarding you for believing in this strategy.
And this chart? Well, this tells you everything you need to know about where they're placing their bets. Just look at the difference. That $883 million for overseas investment completely dwarfs what they're spending at home. It's the clearest signal possible that their global strategy, with North America right at the center, is the engine they think will drive all their future growth. Which brings us to our final and most critical question.
Mobis is betting the farm on North America and a high-tech future. But with EV demand showing some real signs of slowing down, and with their profits still relying so heavily on that Inc. model, can they actually pull this transformation off? That, right there, is the multi-billion-dollar question.
So, that's our deep dive into Hyundai Mobis' bold strategy based on their latest reporting. This has been an independent analysis by HDIN Research. Thanks for tuning in.